Hello, everybody. Thank you for joining us today. My name is Corey Daharsh, and I'm here with special guest Rodney Robinson for the second time, actually. We are here to bring you part two of the Real Estate Investing for Working Professionals webinar. If you did not catch part one, Rodney and I recorded that back at the end of July this year, and I would be happy to send you the link to that recording via our YouTube channel if you're interested in checking out the first portion of our webinar together. And it's very informal. It was a great session with Rodney where we learned a little bit about Rodney's journey, his process, and looking into his why and establishing what your why is for investing, and a little bit of touching into his investment on philosophy. And he also provided us some great resources for different things that you can learn from and engage in to get into your own real estate investing journey. So with that, Rodney, thank you so much for being back with us today. I greatly appreciate it. I'm going to go ahead and flip here to our slide with all of our contact information. So if anyone does want to take down our contact info, we will have this back up again later on. Thank you, Rodney, for joining us.
Thanks, Corey. Glad to be here.
Awesome. Well, with our contact information here, again, we will have it back up later towards the end of the slide. Also, I want to take a point right now to let everyone know there is a muted listener mode right now, but anyone that is interested in asking questions, please feel free to type those into the question box in the GoToWebinar. I will read those periodically to Rodney as they relate to his presentation, and we've also got a session set at the end for Q&A in general. So please feel free to interject with your questions. We would love to go over them in the moment as they relate. And Rodney, I'm sure will also reiterate that as he's speaking, where we get to certain points where your input is actually really warranted, and we'd really like to hear from you so we know that we're addressing the topics that you're here to listen to and learn from. In general, today's agenda is going to be basically just going over a basic understanding of self-directed investing, a quick recap of some items that Rodney did cover in the last webinar, and then we're going to take into part two of Rodney's journey, where we're really going to talk about building your brand and your marketing as far as how you get out there and get started into investing. And again, as I just mentioned, we'll end with a question and conclusion section towards the end with any questions that maybe didn't get covered or that you have at the end of our webinar today. If you're not familiar with Advanta IRA, we are a self-directed IRA administrator. We've been in the business for about 20 years. We've got about 8,000 active clients right now with just under $2 billion in assets under management. The two things that I would say we do that stand us aside from our competitors in this space is we do a lot of focus on educating the community and educating investors about self-direction, because it's a very little known niche of investing strategies. And also we pair each client we have with a dedicated client account manager, so they have one person that they deal with at Advanta on a regular basis that ends up knowing all of their typical trends and able to help them out in the best way possible once they establish that relationship and that rapport. I spent about 5 years as a client account manager, and I loved learning from my clients on what they like to invest into and just kind of how to best experience the world of self-direction with them and through them for my own personal gain and my own investment strategies that I'll be utilizing in the future. If you've not heard about self-directed IRAs, that's pretty common. Not too many people know about them. But again, it's an IRA that allows you to invest into any asset you would like instead of just the specific products that larger clearinghouses would select for you or allow you to invest into on the market. Some typical investment strategies include real estate investing, notes or paper investing, private placements, precious metals, foreign currency, and in the context of our webinar today, syndication investments as well. So investing into a larger group that's actually doing a real estate deal, such as the type of things that Rodney puts together with his investment strategy and firm. And again, if you've not heard about self-direction, that's perfectly common. Only about 4% of retirement accounts across the country are currently self-directed. So it is a little known strategy and niche in investing that, again, our company is really trying to expand the knowledge and understanding by way of education and a lot of different things we do, outreaching in our local communities, as well as on a national level with some of the digital and web content that we put out. Now, I keep saying IRA, but it is important to note that you can self-direct other types of retirement plans, such as HSAs, education savings accounts, and 401ks for small business owners and sole proprietors. We offer a few different solo 401k plans and products that could fit your needs if you're a small business owner. And also, again, the typical IRA, Roth IRA, SEP and simple IRAs, which are a little bit less common, but also, a lot of people are familiar with them or may already have them, just not in a self-directed capacity. Now, you might be thinking, why would I want to start investing with retirement funds? I've got a few examples here just as to why some of our clients turn to self-direction or continue to use self-direction. In the context of continuing, once you start an investment with an investor like a syndicator or another hard money lender or something like that, you can easily reinvest that money once your investment has paid off, just by redeploying the same funds into a new deal with new paperwork. You could also turn to self-direction if you don't think you're going to be utilizing any of the money in your IRA in the near future, and you're turning away from lesser gains, such as a CD or investing it on the market at a 1% to 2% rate. Self-directed investments are controlled by you, so you typically have the ability to do your due diligence and find a deal that has an expectation of a much higher investment rate of return than you could otherwise get with some of those baseline products. And again, with self-direction, the key words there, self-direction, no one is out there telling you what you can and cannot invest into. Now at Advanta, we will help you with the guidelines of what IRS rules and regulations are, but it's very broad. You can typically invest into almost anything under the sun with a few stipulations that I'll be happy to go over with you. And you're the one ultimately making the decision as to what investments you place and how long you stay in them and so forth. It is very important that I convey this disclaimer. Advanta, its employees do not provide any investment advice or endorse any specific products. Everything that Rodney and I are going to be talking about today is strictly for educational and informational purposes. We do implore you to do your own due diligence and consult your own professionals, attorneys, accountants, CPAs, financial advisors, before you make any investments. It's very important that you understand the self-directed investor is doing their own due diligence. And in part, we do always implore you to invest with the people you know. Build your network. That's something I know Rodney and I have talked a lot about, is building your network, helping others around you grow, which will in turn help you grow, and also help build your confidence in your network for future deals and future investments you might be looking to make. Now, I alluded 2 slides ago to how broad the ability to invest through a self-directed account is. Right here is pretty much all of the rules and regulations around self-directed investing. You cannot invest into a life insurance policy or what the IRS would deem to be a hard to value collectible, like antiques, alcohol, fine wine. Older vehicles are something that you're not allowed to invest into. But you can invest into some precious metals. There are some that you cannot. That's something we can have a dedicated conversation about if you're interested in. And the other thing that the IRS does to restrict your IRA investments is prohibit transactions with disqualified persons, meaning your parents, your children, anyone on your lineal, descendant, or ascendant tree. Siblings are allowed, and other relatives that are not considered disqualified can invest with you, or in a capacity where you're investing with them or through them. But anyone that's a disqualified person is strictly prohibited and would have to be either on your side of the deal or just not involved at all in the deal in question. Now, I'd like to take a moment just for everyone to consider what type of investor you are. If you're an active investor, someone that's currently doing your own rentals, rehabs, or wholesaling, you end up needing more control. You make more decisions, and it's more of a hand-on strategy. That's something you can do within a retirement account. There's certain ways that you would want to do that, and we can cover that in different webinars. We do cover that in different webinars, rather. What we're talking about today with Rodney is specifically passive investing. So investing into a private placement or a syndication or private lending. In this capacity, there's no time commitment. There's no specific items that you have to do or maintain. And it really ultimately ends up being what's called mailbox money in this industry, just money where you fund it out with your investment and you ultimately just receive returns on that investment over time until the investment's paid off. I know Rodney, as a syndicator himself, has set up passive investments and has done passive investments in the past. And it's a real great strategy for self-directed investors. Once they know that it exists, if they're already doing something like that with their own money, tapping into this tax-sheltered retirement funds are a great way to get that money to work for you. Again, as I mentioned earlier, in a hopefully better and more favorable fashion than putting it into a low interest rate CD or the volatility of the open stock market. So for those reasons, again, I'd like you to consider what type of investor you are. And with that, I'm going to hand everything off to Rodney here, who's going to go into part 2 of his webinar. Again, part 1 we recorded back in July. It is openly on our YouTube channel. I am happy to send you a copy of the slides if you're interested in those, and also the slides from today's webinar after the session's over if you'd like to email me for those. At this time, Rodney, I'm going to transfer the screen sharing over to you, and you can feel free to take over. Rodney, while you're getting that up, we did get a question. If you have a regular Roth IRA, can you transfer it over to a self-directed? The answer is yes. The IRA can definitely move over to a self-directed Roth IRA, and you would be able to make any alternative investments directly through that account. You do not need to close the current IRA. You could do a portion of it if that's a sub-question you are wanting to ask to that individual. So you can just diversify a certain portion of your Roth IRA to start doing self-directed investments and just move over that portion. It is not a taxable event in nature if you're moving funds from one IRA to another IRA at a self-directed custodian. So it's a very simple process. Typically just involves our application packet, a transfer form that we submit to your current custodian, and we typically see that money received in about a week's time. And thank you for your question. Again, before Rodney officially takes over, anyone else with any further questions, please feel free to jot them into the question block. I will interject with those to ask Rodney and ask them further throughout the end of the session as well.
Hey, Corey, I'm back on. I had some technical difficulty. If you can share it again, I should be able to get started. Sorry about that.
No problem. I just hit the button again.
All right. So thank you, Corey, for the opportunity to come back. It was last July. We spent a lot of time talking about my why, the journey into real estate. And I'll get back into that a little bit just before I kick us off into, the second part, which is building your platform and your brand. I'm super excited to share this. And, I wanted to have more time to do it last time, but I couldn't. So like Corey said, if you have questions, please do not hesitate to ask. I want to make sure that I'm answering questions. This is value for you as the listener. And just, wherever you are on the active side, the passive side, you're not sure, you're trying to build a real estate business, you want to know more about the real estate business, but in any case, I want to make sure that this is relevant for you. All right. And really quick sound check. Can you hear me, Corey?
I can hear you fine. I can see your screen. You just flipped it to the About Me page.
All right.
So yeah, we are good there. And I have the chat box open for questions. I'll be keeping an eye on that and interjecting. Real quick, there is a question: is leverage allowed in an IRA or a Roth IRA? The answer is yes. There are certain stipulations with leveraging a retirement account. And if that individual wants to email me, I will be very happy to provide further context to that. That's not necessarily the lane we're going with today's webinar with Rodney, but I can provide further information about that in a separate capacity.
That's good. That's good. All right. So as I shared in the first webinar, just as a reintroduction, so I'm a working professional, and that's pretty much my target audience. And I'm going to spend a lot of time talking about who I try to reach with my real estate business. But a little bit about me: I have a degree in marketing from the University of Central Florida. I didn't realize while I was in college that my job in leasing at one of the top student housing complexes in that area would be so instrumental to where I am now and what I'm working to achieve now. One of my greatest values is family and raising the future generation. So as you can see to the right, this is my family. There's my wife Chantel and our 4 children. 2 of them are twins. It's hard to get them to all look in the same direction, so this was the best picture we can get. You see there's one guy there who doesn't quite have the smiley face, but we try. So a little bit about my journey. I started in real estate in 2019 with single families, but in my head, I started much sooner. So I still struggle to say I started in 2019, and I'll get to that in a second. And then in 2020, during the pandemic, as with many people, I decided to do something different and focus on multifamily, do a total shift. And that's where I am today, working on building a multifamily business, helping others, especially working professionals, understand more about what it looks like to passively invest in the multifamily asset class, and also investing in communities that I love and care about. Took a big step towards that in 2021 with my first LP deal. And what I mean by that is limited partner deal, meaning I'm a passive investor, just like those I try to reach in my target audience. So I'm going to click over, but before I do that, I want to remind you that slow me down. If there's something I gloss over and you have a question about, there's no such thing as a dumb question. What you'll see me doing is I end up talking about what anyone can do and why anyone should understand and have a marketing platform if they're focusing on real estate or if they're an entrepreneur. And if you've tried to get yourself on a team, or if you've gotten yourself a full-time job in the past, you understand the importance of marketing, or at least you should, and I'll try to remind you. The other portion of this, and I'll go in and out, is what I do with my own business. So I want to speak to both people here, but the questions are going to help guide me with the information that I want to be able to share today. All right, let's see. All right, so a little bit more about the investment timeline. Here's the reason why I said I believe I started much sooner. I knew a lot about real estate before I did my first rental. In 2013, that's when I really began studying real estate. But as you can see, there's a gap between 2013 and 2019. And, I probably could have started sooner. And there was a lot I didn't know. Even though I began studying, I was reading a lot of books. And what I've done this last year and a half has been much more instrumental than 6 years of sitting on the sidelines and learning. So that's what I look forward to sharing with you. And it really has to do with building a platform and networking virtually and in person. So no matter what strategy you're trying to follow with real estate, and even outside of real estate, you'll find this content relevant. All right. So the goal here, it says to effortlessly raise private capital. That's my goal. But as we go through this, we're going to talk about, first of all, knowing the rules and being knowledgeable when it comes to what you can and cannot do when you engage the public. And then identifying your target market. Anyone on this webinar should find value here, because no matter if you're in real estate or you're outside of real estate, you have to know who you're talking to, or how are you going to know, what to say and what channels to reach them at. So it's very, very important. After that, we'll talk about creating a platform to reach your audience. And don't discount yourself, because this also applies to you. And then more on my business, how I maintain a passive investor database, and then how I nurture leads and investor relationships. And then finally, how anyone on this webinar can take your step in building a platform. Take your next step in building a platform. So let's get started. So I don't want to gloss over this. This is a very important piece of my business and my focus. Like I said earlier, I focus on capital raising. I focus on building investor relationships. You have to understand the rules and regulations. And so there's a difference between two of the exemptions when it comes to raising capital, 506B and 506C. And for most of us, we should just understand very simply that any relationship you get in with a sponsor, that's someone who's syndicating an apartment deal or a self-storage deal or office or retail or anything like that, raising money from the private community, it should be a pre-existing and substantive relationship. That simply means they know you, they have a relationship with you, and aside from that, if they were to advertise or market to the public, it would be under a 506C, and they have the responsibility of ensuring that the investors are accredited. My bet is that many people on this webinar are not accredited, so the takeaway here is start now developing a relationship, and the best advice I can give you is invest with people you know and trust and whose values that you are confident align with yours. All right, so I'm going to skip that, and then we'll get right into identifying your target market. So a little bit about my business. There are different parts and roles that people play when it comes to syndicating an apartment deal or syndicating an apartment investment. And my focus, and something I just chose last year, was I'm going to focus on engaging investors. I already had a blog. I started a blog. We'll talk about that. And I already began a platform and started to have a brand that was becoming a little bit more known. So I went this route, and a long time ago, I decided to ask myself something that I learned in my marketing classes years ago. Who is my avatar? And an avatar is basically an individual that you could assign to your general marketing target audience. So in other words, if you can just make one person out of your typical target audience, what is his or her name? How old is he or she? Where does he or she live? What do they do for a living? What are their goals? What are their problems? Just characterize them as much as you can. And if you don't get anything from this is so important for you. I hope that you take the time to identify your avatar, because if you don't, you'll spend a lot of time on social media talking to everyone without really knowing what your strategy is for reaching that someone. And in this business, when it comes to raising private capital, I don't need 100, 200, 300 people to follow me. I just need a few close people that are interested in what I'm interested in and aligned, and that can make all of our goals very successful. So the point I'm making here is it's very important to understand who your target audience is and keep it very simple when you're trying to reach them. So an early mistake that I made early on, as you'll see at the bottom of the slide, is trying to do just that, be everything to everyone. And that's exhausting. So stop counting your LinkedIn followers, your Instagram followers, even your email list, and focus on quality over quantity. What I mean is, rather than having 500 people in your email database, or let's say 2,000 followers on Instagram, if none of them align with what you're trying to achieve, then that's not necessarily, accomplishing your goals. And I believe a lot of people, including myself, can get very stuck here. So before I go on, are there any questions? There's a lot here. It's very rich.
Yeah, Rodney, I just wanted to interject with, I guess, two different things here. When you first started, I know you kind of made a joking reference to starting before 2019, but officially calling that your starting point. What were some of the things you did to learn about investing, as far as like the lingo and different things that other new start investors may not be familiar with? I know you've used the term, capital raisers, and a few things that I know from being in the industry as well. But what was your initial grasp or jump into the whole world of investing, and how did that lean into you ultimately deciding to figure out what your avatar is and where that person stands as well?
Well, that's a really good question. I think I evolved over time. To answer the first part, I simply read a few books, and then I listen to a few podcasts. I would say in general, any book that Bigger Pockets has published is a recommendation of mine. So I'm looking at Brandon Turner's book on rental property investing. I think that's fundamental. It's basic. It's easy enough for anyone to understand. And then I started listening to great podcasts such as the Real Estate Guys, and they have a great, general total picture approach to real estate, the economy, and asset classes. But what happened to me was I realized I'm good at my day job and I have a passion for real estate. And last year, I realized that there were so many people that are just like me that are good at their day job, and they may not have a passion, but they have an interest in real estate. And the problem that they have, and this is why you and I, Corey, align so well, is because we're trying to help people solve the same problem that they may not even know they have, which is limited options in their investment strategies. So that's how I came to the avatar of the working professional, those people who are good at their jobs. And what I'll do, Corey, is I'll slide over. I think, yep, this is it. This is my avatar. And I just found this picture online. I don't really know what he looks like, right? But I assigned a name, just made up a name, Dylan Jacobs. But what's most important is this person's occupation, maybe even their age, being a working professional, probably in the higher ranks in the company, and then their primary investment strategies and needs. So let's just say this person's in his mid to late 30s, and has a solid 401k, a decent stock portfolio, and wants to continue to grow in his career. This is exactly my target audience. And this is exactly why I spend more time on platforms that my target audience occupy versus others. So, Corey, this is exactly how I came up with my avatar. And it could be a male, it could be a female, but what's most important is what they do and what their problem is. And their problem is, which they may not recognize, is that they may lack diversification. And there are other options outside of that standard 401k and stocks. But I'll stop there. Did that answer the question, Corey?
That did answer my question, and even furthermore, it does point out that in your case, Rodney, your target avatar doesn't necessarily have to be a savvy real estate investor. It just has to be someone really trying to seek that freedom, that financial freedom you mentioned in your needs. And you're here to bring that education and that information to them through the way of networking and actually expanding upon what offerings you have in that case scenario, to provide that education to them, which I think is a very pivotal part in this whole grand scheme, is that you don't necessarily need to go after the who's and how's specifically in real estate investing. It's just people that can similarly align with your goals and your strategy and what you're tailoring your business to, and then the rest of it will sort itself out from there through your expertise.
That's exactly right. So there's a different message when you're talking to a working professional versus someone that's, let's say a professional in your business network. The lingo is different. It's simpler. They want to understand returns. They want to understand how the deal even works and how can someone invest in syndication. And that's what I spend a lot of time with my content on. And I try to keep it basic and very simple. And I could not do that if I hadn't first identified who my avatar is.
Perfect.
All right.
Well, thank you for the question about the avatar to the participants here. Please feel free to interject with any further questions as we go, and I will have them read off to Rodney accordingly. Thank you.
Yeah. Thank you. Questions are celebrated. Don't forget that. All right. So create a platform to reach your audience. So as soon as you read this, you might be thinking this doesn't apply to me, but I'm almost certain this does apply to you. Even if you're interested in passively investing, even if you're doing a different side of real estate that's not necessarily raising capital, you have to be known. And I learned this, and I'm still learning this over and over again. In a later slide, I'll show you what I did this weekend that really solidified what I've been working on over the last year, but it would not have happened without this. So building your platform, and I'll tell you, you can read the words here. The biggest challenge that I see and the biggest struggle that I see people have here is not the how or the what, it's just getting started. So I've spoken with a lot of people that talk about wanting to have a podcast or start a blog or videos and things like that. And they talk about it for a long time. And maybe they're looking for perfection. I know I was, but I've done this before in the past on some other, uh, endeavors, and I delayed, and I got tired of that. So what I did in 2020, and I encourage you to do the same thing if you're, looking to build a network, is to build a thought leadership platform. And it could be anything. It could be a podcast, it could be videos, it could be a blog, but whatever it is, keep it nice and fresh. And what I mean by that is don't let it go dry. And what I mean by that is, keep content coming, be consistent. In my case, because I want people to come to my website, that is my primary real estate for getting to know who I am, and signing up for my email list, which I'll remember to share with you why that's so important, is that's where I keep my content. And in order to exchange that email for something of value, I'm giving away something, and what I'm giving away is a passive investor startup guide. That's my unique gift to anyone that comes to the website. It's valuable for them, and in exchange they give me permission to engage them in the future to talk about my business, what's going on with me, in my monthly newsletter or with the weekly releases on our blog. So the key takeaway here of this slide is, regardless of where you are or what type of business you're planning on doing, I highly recommend that you have some sort of thought leadership platform. That's how people take you very seriously. And it's not going to happen overnight. It's one single step at a time. All right. Any questions on? Yeah, go ahead, Corey.
Yeah, real quickly, when you're talking about this platform, I just want to clarify your blog posts or your podcast, they're not, and correct me if I'm wrong, they're not specifically targeted to your exact avatar. They are in the most part, but they're also deviating a little bit to expand and broaden the horizon for those that may not be that exact Dylan Jacobs avatar, but maybe Dylan Jefferson or
Yeah.
you know what I mean? Someone that's similar, so that you're actually casting a wider net with this platform than your actual specific defined avatar. Is that a proper way to think about it?
So at first, I probably would have been hesitant to say, yeah. In general, I am focusing on my avatar. At the end of the day, I can do all this. And if I'm not meeting my primary goal, which is to meet potential passive investors and help raise capital for great opportunities that I know that they'd be interested in, then I failed in my mission. But I will say, Corey, you're onto something. And to a degree, I do that. You cast a wide net because they may not be that software professional. I think I called them a project engineer today, but they may be interested in doing that in the future. And it's just like any other professional service. You're looking for the people that will be ready tomorrow. They may not be ready today. So here's an example, Corey. Today, someone that comes to my website or went through search and ended up on my website may not be in the position to invest and make a passive investment in a multifamily real estate asset, but they want to learn how. So now I talk about debt. I talk about rolling over your restricted 401k into something like an IRA with Advanta. And I talk about my experiences in doing those types of things because I want them to come along with me for the journey. So I will say, Corey, the people that are following me and my brand on the website and have signed up to our email list, there's a great majority of them who are not ready today to passively invest, an overwhelming majority. But they are very engaged with the content, and someday they may be in a position to do it. But in any case, there's a reason why they're there, and that's because they're finding value in it. So yeah, it's both sides, Corey.
Perfect. Thank you.
Yeah. All right. So I started talking about it a little bit, but here is what my platform looks like. It's nothing special, but I'm proud of it because I did it. And once you start, you'll be proud of yours. I started a blog for a specific reason. I wasn't ready to do a podcast, and I'm a decent writer, and I can do it in my own time. So as you saw earlier, I have 4 young children. And my schedule, especially last year, was very, very tough. So I knew that I can do a blog on my own time versus having guest interviews set up and, the coordination and a lot of the back end type of, infrastructure you'd need for a podcast. So I started a blog in July 2020, and I remember writing my first post, and I was like, I bet no one's going to read this. And, I was probably right for a long time that they didn't read it, but the most important thing for me was taking those steps. And now today I have new posts that come out twice a week, and they'll continue to come out twice a week. What I do with my blog content is I share it regularly, and I'm starting to share some of the older things that I think are valuable for people that are interested and who'd like to learn and grow the same way that I'm learning and growing. I primarily share through LinkedIn, and that's where, like I said earlier, my target audience is. But I learned that, and this is what we kind of talked about, Corey, not long ago. I learned that people want to know Rodney the person and not just Rodney the working professional. So I do get personal. I get personal on my blog content, and I use more personal social media platforms. So now I'm on Facebook, which I didn't have a Facebook for a long time, and also Instagram. But most of the results are on LinkedIn, and I'll show a little bit of that, just an example later. And then finally, this is a screenshot of what the passive investor guide looks like when people sign up. Do not be overwhelmed by this. This was built incrementally and one step at a time. It's very simple to create your platform. The hardest thing is not building it. The hardest thing is being consistent and making sure that you're intentional about getting, content together, because it does make a difference. And I'll show you the results that happen when you do this. So I'm not sure why that bubble is there in the top right, but these are different screenshots of some of the opportunities that I have. I'm so blessed. I'm so thankful. I didn't expect to get opportunities like this well before I even raised money and put together, a syndication or partnered with anyone on a multifamily asset. I'm still on that journey. But, people have seen the content and they're like, hey, I want to have you on the podcast. And this is how I built a platform. So let's stop here. I want to say, this is what I'm doing. This is my mission. No matter what your mission is, it's very important that you put yourself out there. And if it aligns with your goals, you say yes to those opportunities, even if it's scary. So I was scared in that first one. I was scared in that second one. I was scared in that one with Whitney Sewell, who has a daily podcast. And he's had some of the best and brightest industry professionals on his podcast. So I was honored. But what I try to do is find out how they found out about me. And it turns out they just see the consistent, content and sharing, and they see the passion. So no matter what it is that you have that you're working on in real estate or outside of real estate, make sure that it's contagious. And that's where I find social media to be a tool. But any thoughts there? Any questions?
No questions at this point, Rodney. But I would like to echo the sentiment of, you said it on the last slide before this one. You might be writing your first few blog posts or posting your first audio content with the thought in the back of your head of like, oh, no one's listening to this, or this isn't going to be impactful. But really, the way people end up successful in these endeavors is putting that voice to the side and still pushing out that content anyway, and doing what you believe in as far as, reaching your audience and reaching your target. And you'll see, for everyone, just by example from Rodney's past two slides, it will turn for you and it will allow you to grow and prosper if you just silence the negativity and the don'ts and the resistance, and you pursue that dream and that passion, whatever it may be. In this case, Rodney went from writing blog posts that he didn't feel, at first maybe people would utilize or benefit from, to now having multiple different channels on multiple different industry professional, like hard hitters in this industry, asking him to be guests on their platform. So it's definitely just a testament to putting in the work, and you shall reap the rewards.
That's well said, Corey. It's well said. And I think that's the thing that really keeps people back. It's themselves. And hopefully by sharing this, it's not elevating me. That's not my goal. I'm really trying to elevate the listener, you all on the webinar, because all this was a few months of consistent effort. I will say, as I shared in the last part one of the webinar, I had to develop a routine and design a routine that worked for me. So I get up early, and I shared that it happens to be 4 a.m. And I will say that it's not, lately it hasn't been 4 a.m. on the dot, but the consistency has allowed me to make the time to do this. And you can do the same thing. So don't be overwhelmed. Just take that step, one step at a time. And what I want to show here is what happens when you start building that platform and people take note. All it takes is one person to see it, the right person to see it. In this case, I have two examples of, and the point I really want to make is they found me, and then look what they do. There's a program manager, and then there's a VP of basically an attorney in the corporate environment that I know through my existing network, and they want to reach out to me. I tried to redact it a little bit. I may not have done such a great job, but the point I want to make here is they followed my blog, or they followed my content on social media, and now they want to talk about investing. And to me, that's a proof of concept. I'm so excited when the concept works. This isn't anything new that I'm telling you. I've learned this from others. And what I would do when this happens is I would share with those people that told me, like, man, you're right. This actually happens if you stick with it and you follow the methods. So a few important notes here, like, you don't have to pay for very advanced systems here. All you have to do is answer your messages on social media, pick up the phone, and follow through. And if you genuinely care about people, you've created a network. You've added to your network. And I offer investor resources. And when people say they're interested in being a passive investor, I'll send them an email that has the company presentation and a sample of what it would look like if they were to invest in a deal with me and my partners. And then every month they get a newsletter. And it's very simple. You don't have to use any advanced systems to make this happen. It's basic networking and relationship building. And if you genuinely care about the people that you're trying to serve, it's very easy. So I get very excited about this part of the business, and I realize that this is where I want to spend my time. And that's why I'm leveraging others with other skill sets as I work to go to the next level. But here's an example of a newsletter that I send out. I have a special system. It's a CRM system. It's ActiveCampaign, but there are free systems that you can use. It's MailChimp, like MailChimp, or just your email. Start collecting email addresses and let people know what you're working on. So if you're a real estate investor and you want people to know you're flipping houses, or you want people to know you're interested in flipping houses, or you want people to know you're working on some sort of journey, just talk. And be personable. So here at the left, I have a few reminders. So deliver personable, relevant updates on your journey. You don't have to be an expert. You don't have to have arrived. You just have to be someone with a vision, and you want to share that with other people. And then be concise. You don't have to have a whole essay here. It doesn't have to be the most eloquently written, email. And then make sure, because why do you contact them anyway? Why are you sending this if you don't have an option for them to contact you and get to know you better? So with every piece of content that I send out, I leave a way that they can schedule a call, or a way that they can email me, or just give me a call. And remember this, if you've chosen your target audience correctly and you're putting out relevant, personable content, I'm pretty sure I'm right when I'm telling you and guaranteeing you that they care. And what I'll show you is, when I look at the data, I have a list and it's growing. There are people that have signed up and they don't really care. They're probably not really my target audience, and that's okay, because I remind myself that all it takes is, in this particular business, and I bet in yours or in what you're working on, 10 or 12 loyal followers for you to take it to the next level. A lot of people, they really try to, go global and mainstream, but when you're in a niche, it's very important to look at the data and make sure that you're reaching the few. and you're going very deep with them. So I'll stop there. I'm going to go back one before I show the next slide. Are there any questions on like my newsletter or what I do and just any tips?
Yep, Rodney, there were actually two questions that have come up. I was going to hold until the end, but just in the context and capacity of you asking them, I'm happy to convey them
Mm-hmm.
along now. The first one is, do you currently have any investment opportunities you're working on now? And that person also asked to be added to your mailing list. So I will obviously after the fact convey to you their email address. But without getting too much into the specifics of any deals you may have on the table, do you just want to address with the attendees if you do have anything currently on, and maybe just reiterate quickly how they can get a hold of you? And I know you'll have your contact information up again towards the end.
Yeah, good question. I'll say, the best thing to do is to get in the network. So I'll make sure that I add you to the list, and I'll give you a call. I'll talk about, the journey, some of the things that we see on the horizon, and I'll be happy to discuss that with you. So great question. And I'll make sure we do have a contact.
Sorry. And the second one, which kind of is a little bit deeper along that same line, what is the target / actual cap rate of the funds or investments you do? Obviously, with this being a dated recording that will go on our YouTube channel, it's up to your interpretation, but I feel like I can also pass that person's contact information along to you to reach out in a one-on-one capacity.
Yeah, that's a very deep question just because of what the cap rate means and what I think is more important for investors to look at. And I'm trying my best not to dive into that because I can, but I'd love to get on a call with you and talk to you more about, what I believe is a good criteria and what our criteria is, and, understand a little bit more about you.
Perfect. So for those two individuals, I will pass along Rodney's contact information, or vice versa, your contact information to Rodney, and he'll be able to reach out to each of you on a one-on-one basis. Those questions in themselves are not necessarily what we're covering here today, but I will be very happy to make that connection. And again, anyone else, please feel free to ask your questions. I will always, pass them along to Rodney, and we'll address them as best as possible.
Yeah. Thank you. So I'm going to gloss over this because I do not want to overwhelm. This is very simple in my opinion. So the big picture is when you're engaging your audience, and this is more marketing, you want to make sure it's working. So you can feel, or you can look at data. The left side is my email marketing tool that kind of measures who's on the list, how many open, how many click, things like that. The list grows over time, but the most important thing, and I don't really mind that, a small percentage have read the email I just sent out yesterday. What I look at is who's reading it, and that the engagement is so much more important than the quantity of people who are, engaging. And then over to the right, Google Analytics. Anybody with a website can get this. It's amazing. I'm very excited when I look at this and to talk about this, because this is probably the easiest way for you to improve your reach in your marketing. So very simply, I'll just look at one metric, for example, the session duration. Anyone can understand this. How long are people spending on my website? 3 minutes and 17 seconds on average. That's not bad. I mean, it's better than 1 minute and 30 seconds when I first started, 10 seconds. And it's growing. But when I think about how long should they spend, I really don't know how long someone should spend on a financial or investing blog. I mean, at some point they want to get on Netflix just like me, or, do something fun. But what I'm seeing is improvement over time. And the point I'm making here is no matter what you're doing, if you're active, you're passive, if you're an entrepreneur, if you're even in your business, like your professional field, if you're managing something, my encouragement to you is make sure that it's measured. The last point I'll say here on this slide is I'm very proud and thankful that finally nearly, and most of the time it's over half of the traffic that comes to my website is now through organic search, which means they're putting in words and they're coming to my website because it's on the first page of Google. The reason I'm sharing that is it's only because I've been writing consistent content. I'm not a genius when it comes to SEO. I know very little about search engine optimization, but I do know that when you put consistent content on the internet, results happen. So any questions there? I know it's a lot. It gets pretty deep and stuff.
We did just have a question come in, Rodney.
Yeah, go for it.
Oh, it's actually, I believe it's an extension of the previous question. I was just reading it as you were flipping over. Sorry about that. Do you have any multifamily assets now, or are you working to get your first? Have you had one or more? Why is it not shown on Rodney Robinson II.com? That was the question in its entirety.
That's good. So good question. I am a limited partner, so I invested passively. That was my next step for me. I have not syndicated yet. I'm certain I will, because I'm following, a proven plan. I have partners and others that are doing exactly what I want to do. That network is so important. So as I do that, for example, if you go to the website, and thank you for going, you'll see this, I think it might be the most recent blog post. It was about a tour that I did, an apartment tour. And that was a good next step for me. I went out to Orlando for a team that I know in the Southeast that are looking for assets in Florida. And, if we would have had our offer accepted, that would have been a deal for us. So we're just following a process. And also, as you may know, in this market, it's ridiculous right now. So getting a deal could be victory if you wanted a deal that bad, or it could be foolish if, you overpaid for it. So it's a journey, and we're looking forward to acquiring our first, syndicated deal or multifamily asset in the next, 6 months to 12 months. So I hope that answers the question. Very good question. All right. I'm going to skip over what to measure here. These are just examples of what I do measure. I'm going to skip over the systems. And I just want to, I'm very excited about this part. This was my tip for everyone, is to expand your network. This was the first time I actually got away from my desk and went to a conference in person. And it was just last weekend. I did a conference last year, multifamily conference. It was virtual, but and that was great. But being able to meet people that are doing, such amazing things in the business in person and learning from them is amazing. So how does that blend with the whole marketing platform I was talking about? If I had not started that journey a year ago behind basically in my pajamas writing blog posts and talking about what I'm learning and stuff, these people wouldn't have known me by the time I got there. And now I just solidified relationships with people in person. And I'm super thankful for that. I couldn't have orchestrated that, but basically consistent action. You getting on those Zoom calls, you're engaging people that follow you, and you're being friendly, really can, help expand your network. And that's what I hope for everyone, whether they're passive or active.
And Rodney, I'm
yeah,
sorry. I can reiterate that as well if you just, right there. So just in your event that you went to this weekend, this past weekend, I had sent you a comment on LinkedIn and just said, this looks great, enjoy your time. And one of the gentlemen in these photos added me to his network on LinkedIn just by way of sending you a nice sentiment. And then also Vinny Chopra, who we see there, has been, he's done webinars with us through Advanta, and I've met Julianne Peterson through webinars that I've gone to and education content. So just in this small world, there are so many people from these photos that I've also networked with completely independent and differently, but also through networking with you have met and made engagements with as well. So it is just a sentiment and a reiteration of, you don't need to count your individual followers or your individual connections, but if you're actively engaging and, being supportive, that will naturally grow in itself as you're, pursuing your journey and really just doing what you believe to be the right thing to pursue that journey.
Yeah. Corey, I get so, excited when I think about how any of us can network so much better and how effective networking can be. You don't see it from the day to day, but you're exactly right. When you're able to meet these people in person and finally shake hands, and you already feel like you've known each other. You've helped me grow my network, Corey, and I'm helping you grow your network, and we're helping people in the process. It's amazing. So this person, the guy in the blue shirt you see is in every picture, this guy became like my best friend this weekend. He's the reason why I met a lot of these people. He's a very friendly person. His name's Anthony Torres. And when he walked up to Vinny, he's like, Vinny, like he knew Vinny. And, you know, there we are developing relationships. So Corey, you're exactly right. I'm probably what I'm gonna do for the sake of time is here are some lessons learned. I'll mention a few that are really, really important to me. And I think that everyone on this webinar should know and recognize and really take to heart. And it's on the right side when it comes to reaching your target audience. Number one, I said, know your avatar. You know, understand who it is you're trying to reach. And number two, be consistent. Make sure you're always, you know, putting out your consistent content. It doesn't have to be, you know, once a week or twice a week. It could be once a month. But it's very important that you put it out there, not trying to be perfect, whether it's a social media post or a blog post or a YouTube video or a podcast release. It will not be perfect, I guarantee you. But you'll have nothing if you don't, you know, start today. And most importantly, be original. Use your voice. Be bold. Be passionate. Make sure other people, you know, sense that passion, and then take others on the journey. And, you know, each of us listening on this call have something very special to offer, both in real estate and outside of real estate or through real estate. So make sure that you're being very unique to yourself. I chose to go the path of being a working professional and marketing to working professionals. It's something that I'm good at, and it's my skill because we speak the same language. We know what corporate life is like. There are others that are marketing to others in the medical industry or military. So think about who it is you're trying to reach, and just be the best of you. That's the best thing you can do. So the last thing I'll say is, what are your next steps? Maybe if you don't have a thought leadership platform, you think about prioritizing that, and then you brainstorm what it's going to be. You know, is it going to be a blog? Is it going to be, are you good at writing, or do you just like talking? You just want to turn on the microphone and just start talking, or get the video running and just start talking. And you can even learn while you're doing that. You can interview others. You can talk about what you just read, and then watch for those results. So as someone alluded to, I'm relatively early on this journey, and I'm very excited because when I start to see the proof of concept when it comes to just being a friendly person and putting yourself out there, I get excited to see results, and I want to make sure that everyone here can see the same thing.
Okay, perfect. And as we're wrapping up, please feel free to take down my and Rodney's contact info. For those of you I mentioned in the chat, I will pass along your email addresses to Rodney so that he can reach you guys directly that have asked me to do so. There's a handful of people that have reached out in the question box just to say, put me in touch with Rodney. I do have 2 questions that have come in, and for the next few minutes, as I'm getting Rodney to answer these, if anyone wants to drop any questions in, I will try to get those addressed before we wrap up. Rodney, do you have a minute just to take these 2, and hopefully if any others come in?
Yeah, of course.
Okay, perfect. So here's a unique one. I am pursuing my first real estate investment in a single family home simply as a funder of the costs. I have a list of questions / data requests. Do you have a checklist that you share or ask before investing? That you can share or ask before investing?
I would, and this is where I would recommend, I could tell you something, but I would recommend better resources and write down the name of this book. I'm looking at it. I'm sure there's a checklist in here. It goes to the fundamentals. It's the book on rental property investing, and it's by Brandon Turner. That was the one I mentioned earlier.
Brandon Turner from the Bigger Pockets.
Yes. He's got an amazing platform. And I would say that that's probably the best book for anyone who's looking at rental property investing and wanting to make sure they do it right.
Perfect. Thank you for addressing that one. Here's another question. This more or less is asking about your role or your current position. The question is, so are you raising money for other people's deals, Are you compensated in any way for raising money in other people's deals? If you just want to kind of elaborate on the nature of syndication and really specifically where you currently stand in your real estate investment journey at this point.
Got it. So, we do have to make sure that we follow the SEC guidelines, and that's why I started with that. So anybody who invests needs to have, and it's the responsibility of the sponsor, that's myself, to ensure that they have an existing relationship with anyone raising money or anyone who's investing. So I have partners and people that I potentially partner with in the future. I call them preferred partners. And we would basically do a syndication together. So we have, in our network, people with more experience, people who have successfully syndicated, and we would be able to go in as the GP, that's the general partnership together. And it's not just, raising money. There are other things that someone like myself would bring to the table, such as asset management, with my years of experience as a leasing agent. But yes, within our existing network and expanding network, we'd work with others on potential opportunities. But we have to make sure that, we have the relationship, and that, of course, I'm working with people who are aligned with my own interests and my own criteria and values. So,
and if I could elaborate on that just briefly, to put together a deal in these capacities that we're discussing, it really does involve a wide range of skill sets. You just mentioned, in general, capital raising and just a lot of different expertises. Underwriting in itself is, to me, at least from an outsider's perspective, such a large and daunting aspect and task. But for one of my partners, underwriting could be their bread and butter. It could be something that just comes to them inherently and naturally. And that's why putting that network and that team together for these types of deals is a great way to lead into success when you've built a team and surrounded yourself with like-minded individuals that have the ability to put their heads together and get a deal done.
Yep, that's exactly right. And it's just like you said, Corey, this is a team sport. No matter how much capital one person has, no one can do it on their own because of the necessary skills. So generally in a syndication, you have different roles and responsibilities that include the investor relations, that's where I'd focus on. You have the asset management, and you have other roles as well, acquisitions and things like that. So you have to get specialized skills together, and not everyone can do it, do everything. So it's very important. And like that conference I went to, it may have seemed like thousands in the room, and there were thousands, but that's a very, 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 very small subset of the overall population. So it is important to know people and to develop those relationships and making sure you're working with decent people. So that's my job when it comes down to, working with our passive investor partners and with potential other general partners.
Perfect. And we do have just one final question, and I guess to address this is really just to, put a close on the webinar. The individual that had asked about the compensation and raising money is saying they're not following. It says, you said you are passive, now you're saying active GP task. Can you kind of elaborate on the difference there with a passive investor and then your role as a partner in doing GP tasks, the differentiation there of the roles and what they actually do as separate things?
Yeah, so a passive investor is simply someone that invests and they're a limited partner. So their real risk is limited to their investment. So these are the people who are investing in the syndications after developing the relationship with the sponsor, learning about the deal. General partners are the active investors, and maybe this person understands that. But in order for me to reach passive investors, I wanted to be a passive investor first. And part of what I didn't probably make clear earlier is my goal is to both actively and passively invest. So what I mean is put together our own apartment syndications and also invest in others passively syndications, because there are benefits there of me not having the responsibility of managing that asset And if it's a really great deal and opportunity, investment opportunity that meets my criteria, I get to participate in the upside and the income earning potential from it. So I'm doing both. The passive investment was a good start for me as I learned to speak to passive investors and be able to gain their trust, so that when opportunities come to put together our own syndicated apartment investing opportunities, passive investors, I'm speaking to them properly. I understand what passive investors should look for and understand, such as, regular communication. That's a big thing. It's something I've spoken with a lot of passive investors about. They may have invested in the past and they haven't heard from their sponsor in a while, or they're not getting the frequent communication. That's feedback that I learn from speaking to passive investors, and now I'm learning from being from my own experience as a passive investor.
Perfect. Well, thank you. I think that kind of answers and clarifies that question very clearly for that individual. So with that, I'm sorry, go ahead.
Oh, no, I was saying no problem. And these are great questions.
Well, there's one more that's actually come in. Does the passive investor get any income, or does it go back into the investment? Can an investor get out anytime? Let me just start before I hand the rest of the question off to you, Rodney. As far as a passive investor that's a retirement account, when the investment does pay out, that does flow back directly into the retirement account. And also, as I mentioned in one of my slides at the very beginning, that can very easily be rolled back into another investment, maybe with the same syndicator or another syndication or another investment. But in general, as a passive investor retirement account, that would flow directly back into the retirement account. I just wanted to point that out. And then Rodney, feel free to clarify about getting out of any investment in a timely fashion or in a timely manner, and then how you would typically see, investors repeat in that capacity as well.
Yeah, so I'll say, first of all, when you invest, it's important to understand what your criteria is. This is not a short-term investment, so you want to make sure that whatever you use to invest is capital that you can keep deployed for the duration of that investment opportunity. So when investment opportunities come around, this is important for people that are interested in passively investing. Make sure you're looking and understanding the details from that sponsor. Ask questions, the same questions you're asking me. Those are the questions that are important to understand, because every deal is different. So I can't tell you, give you an umbrella answer for how the deal is structured. But I can say, most times, and it's expected that your investment is, invested for that period of time until the asset sells and, the investors get their targeted returns. So, but I can discuss more on a call. Like I said, feel free to reach out. I want to be able to help answer those questions. I also recommend that you read the Passive Investor Startup Guide that I have. I think I try to really hit on a lot of the frequently asked questions. And even from this call, I've gotten, some good ideas for other ways we can answer questions based on some of the feedback you offered.
Perfect. Well, I will wrap it up here, Rodney. I want to be mindful of everyone's time, yours included. So thank you so much for hopping back on with me today. Just as a general testament, again, I found Rodney through attending an investor meetup where he was a guest speaker, I want to say 5-6 months ago. And since that point, I connected with you and we realized a few mutual connections and small world type things. And I've personally followed your journey since then because it's inspiring to me, and I see a lot of things in what you're trying to accomplish and what you've been doing over the past few months that I really liken to what I'm trying to do in my own lane and my own world as well. So I just want to reiterate, what you're doing is awesome. The education and experience that you're putting out there through your channels that you're going through is definitely invaluable.
Hey, thanks, Corey. And I look forward to continuing doing the journey with you. It's fun growing with people.
Of course. Well, for anyone here at the tail end of the webinar, thank you so much for participating with us, for asking your questions. The recording will be on our YouTube channel in a matter of a day or two. And if you are interested in the PDF of the slide deck from today, you can email myself and I will be happy to send that along to you. Our contact information have been up here on the screen for quite some time, so please feel free to reach out to myself or Rodney as you see fit. And for those of you that I mentioned earlier, I will have Rodney, I'll send Rodney your direct contact info that you've requested me to do so. Thank you all. Have a great rest of your day. Enjoy the rest of your week, and looking forward to future endeavors with you, Rodney. Thank you so much.
Thanks, everyone, and thank you, Corey. Have a
All
good
right.
day.